All right, guys. Good morning. Good morning. All right, guys. Let's make sure that we're on. All right, guys. Good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. No webcam today. I'm working from the laptop on the road. I only have one monitor with me. I left my other monitor at the house, thinking that I could use my iPad as a sidecar, as an extra monitor. Didn't work exactly the way I wanted it, so instead of messing with it, I'm just doing the single monitor on the laptop today. Hope everyone's having a nice morning. It is Wednesday, August 31, last day of the month, 2022. Let's go ahead and get started. All right. Dow futures are up 83 points. NASDAQ futures up 97. S&P futures up 0.44. Russell up 0.30% this morning. 10-year yield continues to rise higher. Dollar index up 0.10%, 108.88. The VIX 26 down 0.80%. Crude oil is down 1.79%. We'll take a look at that chart. Gasoline futures down 2.14%. Gold futures down 0.70%. Silver down 1.45%. Copper down 1.72%. Bitcoin is up today. Again, that 20,000 level still is holding 2.25%. Ethereum 1579. Euro dollar pretty close to parity, down about 5 pips, 1.0009. Dollar yen 138.59, down about 21 pips. Okay, so I got a good one to this morning where Carlos was wrong because I thought we were going to bounce yesterday. We did not. 40.85, that level did not clear. We got close to 40.72. We actually had the largest volume candle on the daily since June 13th, which is right here. Here's our volume pretty much right here, the highest that we've had since that date. Right after that date, we did fall a little more, 36.39. So didn't get the bounce I expected. We broke that 50-day moving average. In terms of what we did yesterday, I had to close those Amazon calls for a loss. Did get QQQ puts in yesterday, which was well done by the team. Again, you could see this yellow line, that 50-day moving average. Previous support is now your resistance, and you can see that we keep rejecting it. So really, what do you do now? Let me make sure that the volume is on. Okay, volume is good. So what do we do now is really the question. We got the volume, we got some chop here and there, some downward move. But again, what's the target we're looking for? Well, again, below the 50-day moving average is where we are. And I think we do stay below that now since we broke that seal in a sense. And again, 3,900. I've been saying 3,900 now since we had the breakout back in mid-July where I said, I'm just not buying this rally as of yet. Let's see if we can retest 3,900, which is the top of this range here. Now, if we break below that, then we could start tapping retesting the lows of 36.39. But we'll cross that bridge when we get there. But 3,900 is my target that I'm looking for as long as we stay below the 50-day moving average here temporarily. Really the level where I would say, okay, things are looking a little higher or better or we'll get a squeeze is 40.58, which is your 100. But until then, yeah, you have to stay kind of downside here. Really, the 50-day moving average told me all I needed to know. We're below the 50% retracement line on the daily, below the 50-day, below every major moving average on the daily. So again, we are still, in my opinion, heading down to 3,900. Now, why 3,900 being our support? We have this wick trend line, 1, 2 wicks. And again, just doing that trend line to the upside, and you could see we get to exactly 3,900. If we go to the weekly, kind of gives us a little more of a view here, and you could see we're still below the 20-day or the 20-week MA here. We're right below it. So again, below major moving averages, 3,900 is my target here. I do have some Apple puts that I do have running. Let's go ahead and take a look at that. And we'll take a look at the hourly. And again, a little bit of a pop, but again, still below the 20-day. Really, the level where I'm looking at is 162.35. If that breaks above, then yeah, I have to cut these out. But again, I still think we're going to get to 156. I have the 155 calls. Again, we had futures green yesterday, and that came down all throughout the day. Let's take a look at rates and see if rates are going to give us a little bit of a hint. And you could see in terms of the 10-year interest rate, 10-year bond yield, 32.48 being a key level, but I have my alert at 31.65. If that does break, I expect the market to drop more, at least a fast track to 3,900. Look at the dollar, 108.85, getting close to breaking out to 110. So again, watching that very closely, that will really hurt commodities, really help the inflation numbers, and so on and so forth. So we got to eat our vegetables in a sense. Volatility index, let's go and take a look here at the VIX, the hourly, kind of coming down a little bit, filled a couple of gaps. You can see this gap here. We have not filled this gap as of yet, 2059. I thought we were going to get that move back down to around that, 24 or something level. But as of right now, you can see that it is elevated near the 30s, 30 handle, 27.50 or 28 being a big resistance level on the daily. We'll go ahead and throw an alert there for us together. Keep in mind, guys, that we do have a shortened week next week, Labor Day weekend. So again, when you're doing trades for next weekend or next week, keep in mind you only have 4 days instead of the usual 5. But for the most part, E-mini futures still below the 50-day on the daily. That's kind of what I'm watching, but no need to go nuts either. Let's wait and see. Let's see if we have any questions so far. Not as of yet. Okay, cool. Let's go and take a look at crude oil together. I did add a position on Chevron, not too much, about 10 shares, nothing crazy. Again, try and just layer ourselves in. I do like crude oil. Funny, right when I get in, it rejects that 95 level we've been talking about for a while. So imagine that. So right now we're back to the retracement of the beginning of the Russian invasion lows, or the Russian invasion entry. You see it right there, right around 90. The yellow line is key. That's 84.60. That is a very big support on crude oil. If we do break down below that, then we'll definitely get some lower gas prices, which would be nice. Let's go and take a look at gas prices. I went ahead and posted that on Instagram today. How about this on the daily? Breaking down below that trend, that support, big time. Lower gas prices are coming, which is very nice. And again, the next support level, if you're trading it at home, futures or what have you, 180 is your next support. That is a level we haven't seen since around February of this year. Well, February of last year, excuse me. So let's see if we can get down to 177 a gallon. I think that would be very nice for everyone out there. Kind of really tough out there because the Fed kind of wants a recession. That's the only way you can really kill inflation. But the only issue is that recessions obviously hurt many people. Employment, jobs number is too strong for a really severe recession. Too many people are working. Let's just call it for what it is. Labor costs are high. Snapchat, I think, is laying off about 20% of their workers. So we are actually getting some kind of traction, at least on the employment front. I expect unemployment to tick up higher. That is probably the only way, other than lowering inflation readings, CPE, CPI, PPI, or so, where the Fed actually pivots and actually does pivot this time and actually stops raising rates or at least slow down rate hiking. But they seem very hawkish. Keep in mind, the thing I noticed about Jackson Hole on Friday is that Fed Chair Powell had a prepared speech. He's usually pretty hawkish when he does the speech, but when it's the Q&A, it gets very dovish. That's when you start getting the real price action to the upside when he speaks. Interesting that I noticed that there was no Q&A. But again, it was just a speech. So again, we'll see where we go from there. But again, that 50-day moving average is a big level, 40.18, 40.58 being your 100. That's pretty much the levels you're looking for. But again, my real target is here about 3,900, and that's where I want to start adding some risk on the board for the portfolio. That would be the buy the dip level. What do you expect with the NASDAQ? Andres is asking. Let's go ahead and see. NASDAQ, again, very similar to ES. Daily, the 50-day moving average still below. Again, you can see 12.4 here. If we do reject that, then we have here a support of around 11,853. This is NASDAQ futures. If you want to go and take a look at QQQ, I'm with it too. Again, below the 50 on the daily. Any gaps to fill? We got one slight gap to fill at 287.50. So that's something to look at. I'll go ahead and draw a little circle here. And then that is the last gap fill we have. I'll go ahead and place an alert here. 287.66 is that level that we're going to be watching. Again, if we do break down below 299.12 on Qs. Now, it did fall. I mean, it did rise this morning. But again, just remember what we had on yesterday, where we actually had a nice 200-point day in the Dow in the morning, and then it just rejected. So these things do move quickly. Many traders may be on vacation, but the machines aren't. So again, the algos and the machines are the ones trading here. Machines versus machines for the most part. Again, usually towards the tail end of August, right until Labor Day is when you get a lot of the trading desks or light liquidity out there or light volume. But again, you could see here, look at the volume here, 830 in comparison to highest since June 13th. Last time we had that kind of volume, we dropped down a little more down to around 36.39 from that candle here. So we went from about 40.11 to 36.39. I think we get to 3900, maybe even hover around 38.60 or so. But I do expect a little more weakness. But again, it's really just technicals. The market is pretty resilient so far in terms of looking at the last couple of months. Again, we created that short-term base bottom oversold, overshot it as usual, and then come back down to around 4,000. 4,000 probably being key gamma level, where gamma dealers are trading that a lot of contracts at that level. Call it a pivot, whatever you want. But for the most part, 4,000 being the round number theory where it's a key level. I like to look at the moving averages. The 50 days telling me a lot. We're still below it. We're still below the 100 as well, below the 20, below the 200. I mean, until we start breaking above the 20-day moving average, which is a key moving average to look at, especially on the daily, that is right on that trend line that we broke down. For us to even think about being bullish again or anything like that, we need to get back to around 41.68. I think we do towards seasonality in October, but I think we still get some weakness into September. Now, to be fair, I was wrong yesterday thinking that the 50-day would hold. It did not. So again, moving average is telling what we are. Let's see if we continue to the downside. What moves mortgage interest rates? Number one, what moves mortgage interest rates, guys, is the 10-year yield. That's what it's based on. So the banks borrow at the 2 and they lend at the 10. So always have that in the back here. That's why the 10-year yield, TNX, is so damn important. But again, also it is MBS, which is mortgage-backed securities, which affect the mortgage rates. Central banks and mortgage-backed securities on Fed balance sheet. You got it. Yep. And the Fed needs to get those MBSs off the balance sheet 100%. But the 10-year is a very good barometer to look at. Remember, the banks borrow at the 10, at the 2, and they lend at the 10. But if it's inverted, that hurts banks. Hence why financials have been so weak. And I own financials, and they have been dead money, and I hate it. But this is where we are. Again, just waiting around, seeing what we can get. Let's see if that 50-day moving average does hold. We'll go ahead and leave it there, guys. Have a great rest of your morning. I will catch you guys tomorrow morning for the morning note. I haven't done the aftermarket recap. I'm still working on a couple of things with our tech department. I'm going to start doing more regular videos, kind of explaining more things on YouTube. I'm just working on getting those thumbnails in place and kind of like, figuring out how well we can call it and what have you. But definitely more videos are coming on YouTube. They may not be live. So again, I know we do live all the time. That's not going to change. But in order for the aftermarket recap, I may just record it and be a little easier to kind of explain the day as we go or different things that we watch in the market, maybe more macro or so. But more great things to come, guys. I promise I'm not getting away from YouTube. Don't feel that I'm not going to do it anymore or anything. What do you think the Fed will be able to execute 90 billion of their QT? Maybe half of that. The one thing about the Fed is that I think once unemployment starts ticking up to the point where you start getting the really severe recession warning signs, I think that's when the Fed stops, especially ahead of an election. I mean, there's political pressure always. I mean, get everything going ahead of a midterm. Oh, sure. Human beings, man, that's what it is. Make sure you look great at the end of the day. But I think if we see our NFP report on Friday with a weaker than expected labor market, I think that's more bullish for the market. If the labor market is too strong and we keep adding jobs, ADP just showed that we had 200,000 jobs. Mind you, they have a new set of data acquirement or data setup, so I'm not really sure how they're doing it now. But again, we need labor to pull back a little bit because the labor costs are just high. Now, I don't agree with that personally because profit margins are so strong, stronger than ever for corporate America. They've been able to pass down costs to customers. The only issue is that high employment is inflationary. You need lower employment to be deflationary. Lower employment, excuse me. So it's a tough one to kind of root for. Like, oh, do we want people to lose their job? Come on. Hey, Carlos, last question. VIX is red today. Do you expect it to be green today? I do. I do expect the VIX to be green. I expect the S&P to be red. But to be fair, yesterday I said that, so maybe I'm just as bad as inverse Jim Cramer at this point. But again, market has been a little wild, has been back and forth, back and forth. But I do expect the VIX to be green as long as we stay below the 50. And that's, well, really the 50 and the 100-day. So really the first level is 40.17 and 40.58. If we stay below 40.17, 3,900 is coming. If we break below, if we kind of just stop between 40.58, then that 40.17 becomes support short term. But again, you can see we're tightening and tightening and tightening. The 100-day might break below the 50. Let's see what we get. Have a great rest of your morning, guys. I will catch you guys tomorrow. Have a great rest of your morning. Cheers.